and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here one more time to give you, in this occasion, a quick fresh review on Tsla. Just before the presentation of the results, we are gonna analyze exactly what's the situation of the company, the expectations, the results, the perception by the investors community also, especially in relation with the last declarations and the last comments done from Elon Musk about this company. But first of all, let me go to the presentation as usual to give you more details, every single specific detail about the company on the screen. And let me remind you, before we start the report, click on subscription button if you are not subscribed to this channel, and also click on the bell to receive notifications anytime we upload new fresh information related with the financial markets. Now it's time to go. Start with financial estimations for Q3. Let me reduce the size of the screen so you can see everything in detail. This is nice. Financial estimations for Q3, we got a revenue of $29.73 billion, a EPS of 86 cents. We also got a gross margin of 18.77%. And context, I say analyst expectations are high, given Tesla's market position at recent performance. I had at the end also charts with the price, the potential targets of the movement based on technical analysis. As usual, we always include at the end of the report clear charts of what we think the price is going to do. Also, I include in this report what is the position statistically of the most biggest financial firms in relation with Tesla. Keep on hold, sell, or buy. You will see in a few minutes. Now, going to expectations, Tesla market position and recent performance. Investors will be closely watching the metrics, obviously, but we're gonna analyze everything more in detail. Now, in relation with the last time we have seen Tesla announce something publicly, it was with Robotaxi, with the project of Robotaxi, Robocab, how it's working. In the event, after the event of Robotaxi, we saw that the share was dropping 9% on the market. Why? Because of lack of details on technology and cost reduction on timeline. So most of the investors were expecting this presentation, how they're gonna do it, when they're gonna do it, how much it's gonna cost to shareholders, this new project, and still it was a lack of information, all of this. Elon Musk was taking a Robotaxi to drive off from the place, but still no details. Analysts describe the events as underwhelming and toothless. Missed targets, repeat delays in self-driving taxi rollouts, no unveiling of the more affordable Model 2. Still, again, when it's going to happen, how it's going to happen, he's missing his own deadlines, and therefore the expectations for those investors obsessed with the new technology and especially electric vehicles find in this event a kind of disappointment moment, right? Context, the lack of concrete details and missed targets have led investors to disappointment. We have seen the market dropping. Tesla valuation premium is at risk. Self-driving technology does not show significant progress. And keep in mind that the main cards playing on this poker game, which is the stock market for Tesla, and I mentioned this in our previous Tesla reports, it is that it's not per se a company selling electric vehicles. It's also a company selling self-driving systems that maybe in the future are going to be rented by other competitors, and also how to store energy by the charging points that Tesla is by far winning this battle in the United States. And therefore, I believe in the future, again, competitors going to use the chargers of Tesla, even if you're driving a General Motors car. So again, this is something that's going to generate in the future incomes for the company and diversify the income source, which is good, but still lack of specifications in terms of the project and the targets is causing certain disappointment on investors. Future projects and opportunities, mass market and in electrical vehicles. Investors early await updates on the new mass market electric vehicles, expected to review Tesla product portfolio. We have seen also the threat that China represents in this regard on this company, because we have seen also how even Elon Musk months ago was saying that if the evolution of the electrical vehicles is going in the current direction, China gonna take down all competitors, all Western competitors soon. And even we have seen how the president of the Treasury United States was flying, visiting China just to request to Chinese government reduce the production of electrical vehicles to not saturate the market. Autonomous driving and AI. Optimus humanoid robots and Robonavs showcase Tesla AI capabilities. This is another thing we saw during the event. Humanoids with AI interacting with people around. Potential for future growth and increased market valuation. Yes, the company still want to show off to everyone that they got the technology for the future. They are actually the future, and the future is robot taxis and also robots taking the daily activities of humans. Energy shorter business. Updates on energy storage solutions are anticipated. Diversification into energy store can boost revenue streams, as I mentioned before. Despite current challenge, Tesla future projects hold significant potential. Investment in autonomous driving and AI could drive substantially growth. This is the future, they know that, and they want to impress the public, and that's what they did during the last presentation. Now, going to the numbers, currently strictly value and market price. We got a current value of $220.70 per share. We are going to take a look on the charts in a minute, because I believe the key point is between 200 and 300. We will see that's a clear range on prices, and right now we are in the middle of that range. I will say that probably more close to $200, and there's still certain risk to drop below those levels. Intrinsic value, however, of the company is $173.24, so it should be, mathematically speaking, is overvaluated, which means there is a lot of expectations integrated on the price of this company, and therefore that's why I personally believe the price probably will drop in the coming days. Analyst ratings and price targets. We got average price target $214.68, which is below the current market price, and therefore a correction. Still, my perception is farther than that. It's probably close to $200 as a new level to opportunity to take these stocks in your portfolio. Upside, we got minus 2.73, therefore it's not attractive at all. Consensus rating is hold. I summarize here more or less the perception by the most important financial firms. We got four of them recommending strong sell, 8 of them recommending sell, 20% recommending hold the stocks, 17% recommended buy, and 10% recommending strong buy. So overall, we could say that is winning buy over sell in general terms. And yeah, the evolution of the revenues, the expectation of the revenues is, as you can see here, a progression, an increase on EPAs and revenue, 114.6 billions, 135 billion 2025, 157.4 billions for 2026, and 201.5 billions for 2027 with the corresponding EPS. And again, this is based on the diversification of incomes from this company that again is not only focused on sales of electrical vehicles. It's more than that. It's a store of energy, it's self-driving software and systems, and it's also charging points that all of this could be sold to the competitors in the future. Let's go into the chart, which is something you are expecting. We can clearly see here, let me make some zoom on the chart. We can clearly see here that the price seems to be in a range since 2021, right? We can see a range defined by $300, $200 is the bottom of the channel is $120. We have seen that exceptionally during the summer of 2021. We saw the company rising to $400, which is almost $200 over the maximums of $300. And therefore, that's why I believe the evolution is down now. It's understandable. Even I mentioned this in our previous report when the market was dropping massively. I say, what's the problem? It was rising more than 30% in the 2-3 weeks. Were you scared when you see it dropping 12% on Tesla? Nothing is really going on. And we were right. If you take a look on our previous report, you will see that actually our prediction was in line with the expectations and with what happens after. Now, in this case, I believe we probably will see a consolidation of the price around $200 before we can see something else. So therefore, it means if you got the stocks, in my eyes, I will keep these stocks on my portfolio. If I see $200 again, it's a new opportunity to increase my position in Tesla. I will not buy any of the stocks between 200 to 300. And in any case, if it's breaking up the $300 resistance, obviously is a really good, strong signal. In short terms, we also can see here the evolution, $250 to $160. It seems to be a really clear bottom and resistance, as you can see on the chart right there, right? You can see the projection is very clear, and therefore also we can see that right now both moving average 55 periods and 200 periods are turning down, and therefore we probably will see a downtrend consolidating in the coming days to $200. Best scenario, worst scenario, $180, $160 per share. I think that's all. I think it's clear, it's short, and it's going straight to the point. I hope you enjoyed this video. Please click on subscription if you did. Give me a thumb up and comments if you want to add something on the top of that. Take care. Bye-bye.